afternoon. I'm Jeff Quartermaine. I'm the CEO of Perseus Mining Limited, and it's my pleasure to be able to take you through a few of the details related to our company this afternoon. So, in a simple sentence, I suppose, why should you consider investing in Perseus? Well, Perseus is a growing African-focused mid-tier gold producer of significantly improving scale and size. We have very, very strong financial metrics that underpin cash flow profitability, future growth and capital returns. We have a very strong social license to operate. This is very important in an African context. And we have a team of people that operate very well under proven governance structures to deliver very significant outcomes. Perseus, relative to its international peers, is materially undervalued, in our opinion, and in some measures that relates to the fact that all of our operations are located in Africa. Now, this afternoon, what I'd like to do is to present to you a fairly compelling case, we believe, as to why it is that, in fact, that discount that applies to our stock through our African location is misguided, and in fact, to give you a sense of the opportunity that exists to invest in Perseus. So in a summary, our investment proposition is that we have scale, we have increasing asset quality, the portfolio is geopolitically and technically diverse, which means that we are able to offer superior performance, but very importantly, to reduce the investment risk and volatility associated with our activities. Over time, we've been able to build the strength of our balance sheet very considerably, and at the end of the March quarter, for instance, we had $702 million on the balance sheet, zero debt, and $300 million of undrawn debt capacity. So all in all, around $1 billion at our disposal to fund future growth and to fund returns to our shareholders. We are in the process, as we speak, of currently building our reserve inventory through organic and inorganic means, and we're doing it in a way that we're aiming to ensure that we have 10 years or more of production at or above the current levels of production, which run at around the 500,000 ounces of gold per year level. Over the time, we've demonstrated significant capacity to unlock value, not only through exploration, success and in-house engineering and development, but we've also proven that we have an ability to execute very successfully value-accretive M&A transactions. And through that activity, we've created quite a bit of value for our shareholders over time. As I said earlier on, the strong social license to operate is extremely important in the countries or in the regions in which we operate. And we've got a very, very strong track record of delivering significant benefits to our host governments, our host communities and employees. Not to mention shareholders, of course, who have also done very, very well. And this has all been the efforts of a group of people who focus very, very heavily and take very seriously their obligation to do what we say we're going to do. Now, looking at what actually underpins the company or the company itself. So just to give you a sense of the scale, our market capitalisation currently sits at around 3.3 billion Australian dollars or $2.2 billion. So that's grown quite significantly over time with no debt, but cash on the balance sheet. The enterprise value is reduced a little from those sorts of figures. The stock is fairly widely held on an international basis. So roughly 40% is held in North America, mainly the United States of America, 35% in Australia, UK, Europe accounts for around 20%, and then the rest is spread over a number of jurisdictions. So it's largely held by institutional investors, and it is a very international stock that is on offer here, although its primary place of listing is in Australia, but we have a secondary listing in Canada. Now, underpinning the business are our operating mines, and I can say that we have 3 operating mines. Our first mine was the Edikan mine that was built in Ghana back in 2012. That was commissioned. The second mine we built was the Sissingué mine, which is right up in the north of Côte d'Ivoire on the border with Mali. And then the third mine that we brought online was the Yaouré mine, which is also in Côte d'Ivoire further down the country, very close to the capital city of Yamoussoukro. So we have a multi-mine, multi-jurisdiction operation going at the present time. And that, as I said, is important in terms of being able to spread the risk across the various jurisdictions. To date, since the mines have been operating, we've produced, well, actually to the end of December, it was about 3.5 million ounces of gold. Since then, we've produced another several 100,000. So it's probably closer to 3.7 million ounces of gold, all in from the operations over time. So we have been reasonably successful in the gold mining business. And looking at each of the mines individually, I mean the Edikan mine is an interesting mine because it being our first, we made a number of mistakes in the development of that project, but it's turned into a really very, very significant part of our business. And in fact, today is one of the lower cost mines out there. I think operating at well under $1,000 per ounce and extremely efficient. The Sissingué mine was a small mine that we brought on stream back in 2018, and the objective in bringing Sissingué on, a much smaller mine than our others, was that this was our first operation in Côte d'Ivoire, and rather than spending a vast amount of money learning the ropes of operating in a new country, we decided to start small, learn what we could, and then apply those lessons to our later development, which was the Yaouré mine, which we brought on stream in December 2020. Interestingly enough, having built that throughout the COVID pandemic, delivering it ahead of time and under budget. So that was quite an achievement. And since that date, it's the Yaouré mine has been a major piece of our business, delivering significant quantities of gold at very attractive operating costs. Now, if we look at the group as a whole, you can see from this chart here that all three mines have been performing reasonably consistently over time. But the important thing to note there is that while the gold price has been rising, our cost structure has been remaining fairly stable at around the $950 to $1,000 an ounce. So what that has meant is that as the margin has been increasing progressively with the gold price rising, we've been selling more and more gold into that rising market. And as a result of that, generating very significant cash flows, resulting in sizable cash balances at the end of the period. So this has been a fairly reasonable outcome, good steady performance. And of course, the important point on this chart is that all of this has been achieved on the African continent with the backdrop of the risk that many investors are concerned about. So, the point is that you can do these sorts of things in Africa, and Perseus is living proof of that. If we look at the ability to execute the plans, this chart is really quite interesting. On the left, we have our production performance relative to market guidance, and on the right, we have our all-in site cost relative to market guidance. So the yellow bars indicate the range of guidance given to the market, and the red dots indicate where we have ended up in terms of that guidance. And you can see that and these are for half-year periods, I should say, so this goes back quite a number of years. And in that period of time, the only time that we've missed guidance was the first 6 months of the COVID epidemic. So I don't think there would be too many people who would blame us for that. However, the interesting thing is that on a consistent basis, we are performing at the upper end of the guidance range, or in some instances in the cost side of things, below the bottom end of the cost range. So delivering in line with expectations, one of the key things that drives our business. Looking into the future, the guidance that we've given the market for this current half year, the June half year, of 226,000 to 254,000 ounces and 1180 to 1340. Now, that would result in 491 to 517,000 ounces and $1,000 to $1,100. Now, with data available to me up to the 25th of May, so 5 of the 6 months period, I can say with a high level of certainty that we're going to achieve guidance this period. And in fact, we will be up towards the upper end of the production range, and we will be very close to the bottom end of the cost range. So once again, Perseus has continued to do what it says it's going to do, deliver the guidance and deliver the results that we are seeking. Now, in terms of conversion of production numbers into financials, if we look at the last quarter, for instance, we can we can see some fairly significant improvements occurring. So we produced 127,000 ounces and a touch over $1,000 an ounce. Now, there were reasons why the costs were up slightly in that quarter, and that related to additional mining at the Aori mine. But the average sale price at 2025 delivered a margin of $934 an ounce, or notional cash flow from those operations of around $120 million, which, as we said earlier on, has given rise to a fairly healthy deposit of cash on the balance sheet at the end of the period. Now, in terms of earnings, looking at it year on year, we've had a steady improvement in earnings right across the board. So revenue, EBITDA, gross profit, all of these things, earnings per share, earnings per ounce, have all been on the steady upward trend over the last few years. And similarly, in terms of cash flow, we've been having a serious increase in operating or cash flow from operations, delivering fairly sizable cash flows, $431 million in the last calendar year. So all of these metrics are pointing to very, very strong underlying financial performance, delivering that cash balance that I've spoken of several times, the $702 million. Now, with this cash flow available to us, we have invested in growth, and I'll talk about that in just a moment. But we've also implemented a policy of returning capital to shareholders. Now, our approach to this is fairly simplistic in the sense we guarantee our shareholders an annual yield of at least 1% per year, and we've done that consistently since the dividend stream was introduced back in fiscal 21. In addition, when we have additional cash available for distribution, we send that back to our shareholders as well in the form of a bonus dividend. So in fiscal 22, there was a 1% base yield plus another 0.5% on top of that. In fiscal 23, there was a 1% base plus a 1% bonus. So far this year, for the first 6 months, our dividend was 1.33%, or represented 1.33% yield. Now, in a few months' time, when we come to consider the performance of the second half of this year, we'll obviously add to that. And you can see that there's a steady trend here where we are continuing to deliver returns to our shareholders. In fact, 116 million Australian dollars have been dispatched to shareholders since this policy was introduced. Now, as I said, not only do we return cash to shareholders, but we also invest in business growth, continual investment growth. Now, one of the things that we've been focusing very heavily on in recent times is brownfield exploration. In other words, we explore around the existing infrastructure where we believe that generates the best value possible for shareholders. And pleasingly, what we've been able to do during this period in the last 5 years or so is to replace all of the reserves that we've been depleting through our mining activities. And in fact, the reserve inventory at the end of fiscal 23 was the same as the inventory in 2018. And in fact, in that financial year 23, we actually put more on the inventory than we actually took off. So our brownfields exploration has been successful, and we're investing quite significantly in continuing to do that. And we'll be coming out with an updated reserve statement later this year in August. And I believe the results of that will be not dissimilar to what we've seen in recent years. And where this comes from is that we maintain an active pipeline of organic growth opportunities. So in each of the operations, we bring in properties or opportunities at the lowest level, target generation, and we either move them out of the triangle or up the triangle as soon as we practically can. Up the triangle means converting from an idea to ore reserves, basically. Out of the triangle means that it hasn't yielded what we had hoped for. But we keep this very active pipeline of exploration projects available to us, and we push these things through as best we can. Now, one of the other innovations or initiatives that we've taken in recent times in terms of this continuation of organic growth is that we've entered into a cooperation agreement with Ajlan Brothers. Now, Ajlan Brothers Mining and Metal is the mining division of a very large conglomerate based in Saudi Arabia. And we've entered into this cooperation agreement with our friends from Aslan with the view of co-investing in projects that are located in the geologically prolific Nubian and Arabian shields. We're at this stage of the game, we're targeting projects either at the PFS or the DFS stage. That's our preferred targets, and we look to bring those projects through the development pipeline as we can. We're also looking at, on the Saudi Peninsula itself, where the government in Saudi is conducting, various tenders for projects, but also in the North African countries, we're also looking at some very, very interesting opportunities there. And the thing about this cooperation agreement that is terribly important is that the reason why the Nubian and Arabian shields are still so geologically prospective is that there has not been this level of exploration in this region over the last century that perhaps some of the other countries in Africa have experienced. And one of the reasons for this is that it's been a fairly challenging place to do business from a cultural and a geopolitical perspective. We believe that by working closely together with our friends from Saudi, we're well equipped to manage those cultural differences and to be in a position where we can work harmoniously with host governments and host communities. So this cooperation is at a very early stage, but I have to say we're very optimistic that this going to deliver significant benefits to us as we push forward. Now, in addition to that brownfields exploration, organic growth, we've also involved ourselves in significant infill growth activities over the last few years as well. And by that, I mean we've undertaken a number of M&A transactions where we've taken over or merged with smaller entities to deliver us significant projects to take through the pipeline. The first of these was Amara Mining PLC, which was completed in 2016, delivered at the Yaouré project, which, as I said earlier, has been a very major contributor to our business. In 2018, we took over Exor Resources Limited, which was a small Australian explorer that had projects located close to our Sissingué mine in the far north of Côte d'Ivoire. And this project has meant that we've been able to extend the life of the Sissingué operation by several years. The Orca Gold transaction that took place in 2022 and delivered for us the Mayasan Gold project in Sudan. And I'll speak of that in more in just a moment. And then, of course, we recently completed the takeover of OreCorp. That was a transaction that was completed actually early last week, where we finally gained 100% ownership of OreCorp, which has delivered us the Nyanzaga project in Tanzania. Now, speaking of those projects, the Mayasan project is located right up in the very far north of Sudan. And as many people are aware, in April last year, a conflict broke out in the south and west part of Sudan, which made operating in the country fairly challenging. Now, we came into this exercise with very high hopes of developing a long life, low cost operation up here in the desert near the border with Egypt. But unfortunately, with the outbreak of conflict, we've pared back our ambitions and for a short period of time suspend operations. Now, I am very pleased to say that last week we recommenced exploration on the site, and we'll continue to drill out that site, and with the objective of increasing the resources and the known resources and reserves on that area, with the aim that when peace is finally restored to Sudan, that we would look to develop this project and turn this into a very long life, large scale, low cost operation to complement the other projects that we have in the portfolio. I mentioned also the Nyanzaga project that we acquired through the acquisition of OreCorp. Now, this project is located in Tanzania, which is a very well-known mining destination, a country that has been mined very successfully for a very long time by a number of major companies, including Barrick and Anglo Ashanti. Now, this particular project is owned 80% by Perseus now, 20% with the Tanzanian government. And we, having just recently acquired it, are working very hard at getting the project advanced. We're working on 3 fronts at the present time. One is to complete the relocation of people who are located on the mine site. The second is to drill the ore body out to confirm our belief that the mineral resource and reserve is quite materially larger than the resources and reserves that had previously been published by the prior owner. And then the third line of activity is to undertake a front-end engineering and design study that will result in a final investment decision being taken around the end of this year. Now, if we're able to do that, which we believe we are able to do that, we will go into development early in the new year and be producing gold from the Nsaga project in 2027. This is a very, very exciting project for us. Having spent some time on the ground in the last few weeks, it's very encouraging to meet the people and the government people, and it's very heartening to be in a situation where our objectives align absolutely with those of our host communities and host governments. So we're looking forward to this project providing a very material benefit to Perseus shareholders going forward. And of course, in doing what we do, we work very hard at making sure that our activities are sustainable. Now, the whole issue of sustainability and ESG is an interesting concept because from Perseus's perspective, these activities have been part of our DNA from day one. If I say at times, we spell ESG differently to many other folk. We spell it small e, capital S, small g. And the reason why we do that is that environmental standards and governance standards are pretty well defined and are clearly understood and are regulated by law. So of course we comply with those standards. The S piece is very important to us. So this is the social activity. This is the heart of our social license to operate. And this is where we put a very large amount of effort and have put a very large amount of effort since the time that we first started in this business. Now, where we stand relative to the plethora of standards that are out there, and I'm sure people who study this business will understand that there are many, many different standards that have come into being in recent times. We try our best to comply with as many of these as we can, but the World Gold Council responsible gold mining principles are key to us, and we've been checking our performance relative to these standards to see how closely we are complying, and we're achieving a reasonable level of compliance. Of course, we won't rest until we're fully compliant, but we're certainly making good headway on this. And our reporting on our behaviours come out in an annual sustainability report, which is thoroughly documented, and it is reviewed for quality by independent auditors and can be relied upon. But just taking a bit of a snapshot of some of the things that we have achieved in this space over time. I mean, the economic contribution of Perseus to our host governments and host countries is quite material. $560 million US last year found their way into the economies of the countries in which we operate. And that came in through various means, not the least of which is local employment. About 95% of our workforce are citizens of the country, of the 3 countries in which we operate. In fact, in Ghana, 100% of our workforce is Ghanaian. It's slightly lower in Cote d'Ivoire, where the number of people involved in the industry is substantially less than in Ghana, and we do need to use some expatriates in our workforce. But 95% local employment is quite an achievement. 87% local procurement, so that means that much of the consumables, many of the goods and services that we apply in our business are procured locally, which means that more money is going into the community, and we're building up the capacity of those countries, which is terribly important as well. Now, I mentioned environmental performance. We've had 0 significant environmental incidents in the last 12 months, and similarly 0 community incidents. And that comes about through diligent work trying to ensure that we understand what the requirements are and that we deliver on that. In terms of safety, we've been able to achieve a fairly stable TRIFR of 0.89, which is well below our peers in not only in Africa but many other countries as well, who hold these standards very dear as we do. So the point of this is that we operate our mines in Africa as if they were in any other country, and we don't take shortcuts on the standards that we apply. Of course, on the environmental side of things, we also, are seeking to reduce our greenhouse gas emissions, reduce our carbon footprint, and we employ third-party assurance to make sure that what we do in this space is actually delivering the outcomes that people want. So all in all, Perseus Mining, I said at the outset of this presentation, it is a compelling story, and it is one that investors, would be well served to spend time reviewing. In summary, we're a lower risk, African-focused, multi-mine, multi-jurisdictional operator. We have, very stable and profitable production operations. We're producing north of 500,000 ounces per year, and we're doing it at less than $1,000 an ounce. So our cost structure is certainly in the lowest 20% on global terms, and that is delivering us very significant and substantial financial results, which are best reflected by our balance sheet, where we have a significant cash balance, we have no debt, we have the ability to continue to fund our growth and fund returns to shareholders. And this is all based on the fact that we put a lot of store in our social license to operate, which is based on very sound ESG principles. And so in doing this, we're in keeping very consistent to our corporate mission, which is to generate benefits for all of our stakeholders in fair and equitable proportions. So all of our stakeholders, be they host governments, communities, employees, suppliers of goods and services, or shareholders, receive benefits through Perseus's activities, and this is overseen by an experienced management team and board of directors who focus very heavily on delivering on promises. So that's where we sit at the present time, and that's what we expect to continue to do into the future. Thank you very much for your time.